Clothing the world in a difficult environment. Good evening, and thank you very much indeed for joining us. Later on, I'll be talking to Wahome Muchiri. He's the Chief Executive Officer of Deacons Kenya Limited, and he'll be explaining to us what plans they have put in place to ensure that they remain profitable and in business in this competitive environment. My name is O'Brien Kimani. Thank you very much indeed for joining us. This is the Trading Bell. We are coming to you from the trading floor of Nairobi Securities Exchange. And of course, later on, we'll be talking to Sam Gishohi, Business Development Manager at NIC Securities, and he'll be helping us to put the figures into perspective. Let's now go for that interview with Wahome Muchiri.
Hi, how are you, Kimani?
Very well. How are you doing?
Good, good.
Good. Yep. Nice to see you.
Thank you.
Good.
Thank you for having me.
Asante sana, and we're glad to have you here.
Yep.
Now, I want to find out from you, you are in the business of clothing people and ensuring that we look smart and we feel smart. How has been the operating environment, bearing in mind that, there have been a serious influx of clothes from China, Asia, and the second-hand clothes as well?
Well, there's space for everybody in all markets, and Kenya is no exception. But the last 1 year was particularly challenging. I would say challenging rather than difficult. A number of macro factors and micro factors have changed and challenged the business environment. So we had a very, very tough year last year. And I attribute that to a number of things. I think the structural change in the interest rate capping last year in the market has put a squeeze on liquidity. And customers are definitely spending less. So that was a fairly big challenge. The second thing, obviously, is the continued entrance of new property retail that has generally fragmented the market, meaning that customers' shopping trends are changing to shop more conveniently. Mm-hmm. And therefore, if you're not in a particular location, you lose out on the market. Thirdly, obviously, is what you bring up, which is the second-hand clothing and direct imports into the country from all markets, not just China, Turkey included. And these, the question is still out there as to whether there is a level playing field for retailers, formal retailers like us, and are we playing with the same rules in the same market? And it would appear that there is a very big grey market, and there are players in the market who generally do not conform to various legislation and regulation in relation to taxation. So that muddies the waters and makes it fairly difficult to trade. Finally, the Kenyan economy does appear to be in recession. There hasn't been the admittance by government or by the economists or by the Fourth Estate, but it would appear to business like us that there is a general recession in the market, driven by all the factors, including drought, including overflood of rains, etc., etc.
Elections.
You can see elections, food prices going through the roof, and this needs to be tackled sooner rather than later, because that environment does challenge business performance.
Good, and I still want to hear from you. I mean, when you also remember that, we have seen a deliberate effort by the Ministry of Industrialization, to try to bring EPZ companies into the retail business with the grand sales. This, of course, makes your environment much more difficult.
And one would then ask, why is government allowing EPZ manufacturing direct access to local market without paying duties and taxes?
Is this a question that you have posted to the ministry?
It is a question that we are posing to government. And rather than just complain about it, it's also a situation where we're looking and saying, look, we're the distributors, we're the retailers. So maybe there is an opportunity for us to source those products from those EPZs and distribute them into the market. So I think many governments do things for various reasons. I'm yet to understand what this particular reason was. But all in all, if there is an opportunity, we're going to jump on it.
And start buying from the EPZ.
Absolutely.
From the EPZ.
Absolutely.
Let me also find out from you, I mean, you have a strategy whereby you pitch your shops where there are shopping malls. And we have seen we are reaching a saturation level in terms of shopping malls in this country. Are you likely to change your tact going forward?
I don't think that change of tact is necessarily, in terms of a locational strategy, that the right all-in-one approach that one needs to consider. I think one needs to more understand what each mall is going to do where it is located, because customers will always shop at shopping malls where they find convenience. So that's going to be key. So the question is, which malls are going to survive the flood of malls that have come through into the market over the last 24 months? That's going to be the challenge, is understanding that mall's going to work. What's that mall's value proposition? Do we have the brand to position it in that mall? Because customers are looking for choice and they know what they're looking for. So if you have the right product in the right mall, you should be okay. It's really, my concern would be as a landlord or a mall owner, because are they in a position to actually let out their malls to the full? And we are seeing many malls today struggling with their letting programs.
Occupancy level, standing
Yes.
at an average of 65%.
65%. So that overflow might be a benefit for us, because that means the ticket price should come down all in all. Yeah.
And, just last month you said that you're going to close a number of stores in the markets that you operate in. Have you identified the stores that you're going to close?
Kimani, I am so glad I am here because I can explain it, because that's not what I actually set out to say. I set out to say that the business was restructuring and consolidating. Restructuring and consolidating is looking at your operating units one at a time and understanding what value it's bringing to the bigger picture. So in some instances, we will be transferring stores from point A to point B. In other instances, we'll be reducing space in some of those stores in order to create a better productivity. And in other places, we'll look at the brand proposition within the particular locations that they're in and make sure that it's the right brand at the right place at the right price. That's restructuring and consolidation. And that will include, obviously, a reduction in targeted at reducing operating cost. It'll obviously affect numbers of staff in certain areas. That's what we're targeting.
Do you want to go on record saying that you do not plan to close any store?
No, I would not go on record to say I would not close any stores. What I would say is that we have not made any decision to close any stores as yet.
But preliminary reports indicate that you are likely to close a number of stores which have not been performing as per your expectation. Would you say so?
Kimani, you will not get this out of me.
Come on, you can be kind enough, can't you?
We have, I mean, to be fair to you and to be fair to your question, we have just recently closed one store at the Sarit Center, which is the Angelo store. Angelo. And what we did is we closed the store because it was non-performing, and we relocated our Life Fitness gym equipment showroom into the Sarit Center, where we've got better foot traffic. So there we lost no space. So when you look at my overall gross lettered space, so far it's remained the same. I think that will come down by some percentage. As to whether we will actually cut out and shut doors on particular stores, that discussion, that research is ongoing, and therefore I will not at this point in time commit that we are closing stores.
When do you expect this to come to a close?
Business is a continuous program, a continuous process. You might look at decisions now, given the information that you're seeing, and then you know you have an election up front. Is the data that you're looking at valid to the extent that we're in a very strange one-off environment, or do you wait and see whether the economy will upturn? If it upturns, maybe you'll make a different decision. As businessmen and as directors of the business, one has to be very responsible and very sort of futuristic in their view to make sure that the decision they take is sustainable in the long term. So I wouldn't be making knee-jerk reactions right now because we're in an election year.
And I still want to find out from you, I want you to narrate how people would not dress or buy toiletries because they're elections.
It's a very, very simple answer.
Please.
There is always the priority of needs. We must eat, so you must buy food. That's number one. We must have shelter. That's number two. Number three, we must dress. But then when we dress, we have more option relative to what it is we want to dress. If you're in the lower classes of society, you will be attracted to go for the cheaper product. As you climb the ladder of needs, like you, sir, well dressed, your needs become those of lifestyle. You don't just only want to dress, but you want to dress to look good. Or don't you?
You dress to impress. Is that what you're trying to say? I'm not going to answer that question.
Not dress to impress, dress to look good. Because remember, you dress for yourself. Oh yes, every time you're dressing, when you stand in front of the mirror, you say, yeah, I like that.
I look good.
Chances are, next time you step out of the door, the other people will also endorse you and say, hey, Kemani, where did you get that from? And that ladder continues to the level of brands. So that's when people start saying, that's Gucci. The next lot, the CKs of the world, they then go and say, that's Savile Row suit.
Whatever that is.
That is based on your lifestyle.
You're getting technical, but I want to find out from you.
You went there.
I'm sorry, I got there. Let me find out from you. You operate in 4 markets of Kenya, Rwanda, Mauritius, and Uganda. When you scan the environment, where do you think the big business is coming from?
Mauritius, by the way, we only have a registered office there purely for regional management of corporate business. But we are trading successfully in Uganda and Rwanda. And we are selling gym equipment and sports equipment into Tanzania and Burundi. So that's the sort of spread we have. Kenya, hands down, takes 85% of the cake at any one time on its own. In fact, Nairobi, forget Kenya, takes 85% of the business. Uganda is growing very strongly, and it is a little more sophisticated than the other markets. Followed by Rwanda, where we have 2 stores. They're fairly new stores, and they are showing very good throughput. But then those markets are still very virgin. It's not as competitive as it is here in Nairobi or as it would be in Joburg or Dubai. So here in Kenya, it takes the, it takes the cake. Yeah.
And Muchiri,
yes,
I want to find out from you. You posted 276.65 million shillings losses last year. Is it so hard to sell clothes, actually?
It is, but then, like I said, there were some structural issues underlying the results that we had last year. Within that number that you quote, there were what we call exceptional items that came on board because of changes in audit standards. So one was a provision for obsolescence in stock, in inventory, and the other one was a policy on what you call lease straight lining, where you take the cost of your lease over a period and you provide for its cost, even though it's only a provision that reverses year on year. Technical. So that was about 100 odd million shillings. The second thing was obviously the downturn in the economy, such that Christmas, which contributes over 30% to our annual revenues, Christmas was very, very soft, primarily driven by customers' illiquidity. And that then meant that we had to go into significant discounting, which reduces your gross profit and therefore creates the challenge that you had. It's not difficult to do business in clothing, but it's also a science. You can, in some instances, get your buying wrong. You end up with the wrong inventory, etc., etc. All those issues put together is what created
They conspired.
And finally, because you're in an operating environment, your operating cost continues to grow year on year. If your revenues are not growing and your cost base is growing, then you have a significant problem. What happened last year, and it was the one biggest factor that affected the business, is the investments we made in Kigali, the investments we made at the hub, and the investments that we made at Two Rivers. Almost 600 million shillings were deployed, and those malls were delayed by a year each. Now, the cost of that, in terms of business, is what you see today.
Good. Wahome, we have to come to the end of this interview. Thank you very much indeed for joining us here, and we look forward to having you again in the future.
Thank you, Kimani. Thank you very much.
Thank
you for having me.
Very good.
Yeah.
Wahome Muchiri is the Chief Executive Officer of Deacons East Africa, joining us here on the Trading Bell to help us understand where the clothing industry is going. You have heard it from him. You don't need to go anywhere. Stick right here. This is the Trading Bell. There you have a list of the top gainers and top losers. Top losers joined or led by Eveready East Africa, depreciating by a whopping 28.57%, and Britam Holdings appreciating the most by 12.7%. Sam Gishohi is a business development manager at NIC Securities, joining us here. Thank you very much indeed for joining us. I remember sometimes in January we talked about the market rebounding mid this year. Now we have seen a serious, rally on the market. Who is pushing this rally?
Well, we have there was the expectation that as the results period came, especially for the banking sector, because the market towards the tail end of the bear run, which we saw the bottom at around 30th of January, had happened after the interest rate capping bill was passed. And so there was a lot of panic selling, which pushed the market to lows that we had last seen in 2009. And our prediction was that in the last three election periods, we have seen the market rally during the election year, and we expected that we would probably see something like that happen again. And when the banks announced their results, and it showed that there wasn't much of an effect, because the interest rate capping only happened in quarter three of 2016, then investors started to feel more confident, and so it has started to drive that growth. I think there has been talk by the CS in finance. We've had talk by the central bank governor, the IMF, and even in his speech, in his State of the Nation speech, the president mentioned that there was a squeeze on credit and there was a need to relook at the bank interest rate capping bill and maybe review it. And I think some people are pricing that in the expectation that if it is reviewed, then these stocks will be the ones that will rebound the most. And so there's a lot of investors are showing a lot of demand for them.
And we're having two scenarios here. We have banks, reporting lower than expected profit margins, led by Equity Bank, and also, on the other hand, seeing, bank shares, rallying to, levels that we haven't seen for quite a long time. So, what explains these two scenarios?
Well, markets move on expectation, and you see, expectation is the future. The expectation at the point of the passing of the interest rate capping bill, and it did happen, was a squeeze on credit, because banks avoided lending to the more risky SMEs and individual clients, and moved most of their funds to interest rate bearing government securities. So that has happened. And of course, now we are seeing that effect, which will usually be a delayed effect. Now, because people are expecting, or the investors are expecting that after this period, and because of what I mentioned earlier, has been mentioned by various players or key policymakers within the government, that there is a need to look at how best to continue with this interest rate capping environment, then it means that investors are expecting that there will be a review, and that review will be to the advantage of this sector, and that will push the prices up. So prudent investors will invest before it happens, rather than invest as a reaction to such a change.
When prices have bottomed out. Look, I mean, let's have a look at Equity Bank. This week we saw them declaring their business in South Sudan as dormant, and it is reported that a number of Kenyan companies operating in that market are likely to follow suit. What impact will this have on the equity stock?
Well, I think what you look at here is the percentage of business that, of profit that comes from that particular end, which is the South Sudan business, which is minimal. And so I don't think it will really affect equity as a company. Neither will it affect most of these companies, because I don't think most of them had already broken even or gotten into profitability. And I think most of this is happening because there's a lot of uncertainty in the Southern Sudan market. They have a lot of turmoil, and that turmoil is not good for business. They've had a very big issue with the exchange rates, the dollar and all that. And so that has really hit some of the companies that are trading within that market. And we've even seen some of them make huge losses because of the exchange issues that they have. So I think it is a prudent move where they feel they would rather be out of that market until things settle down, rather than sitting where they are exposed to such risks.
And let's talk about the elections. We are getting closer and closer to the elections on the 8th of August. Now we have started to see the market, rallying. How far do we expect this rally to continue, bearing in mind that we are edging closer to the elections?
Well, I wouldn't be surprised. I mean, the last 3 elections, as I said, we have seen the market rally consistently until after the elections. So, I wouldn't be surprised if we see that trend continue. And this is because a lot of contrarian investors know that, or feel that with our constitutional dispensation, Kenya does not have that big a political risk, as much as is being touted around that we're in an election year. And so the expectation that we will have an election that is smooth, and since we have had others that have been well organized, and we're hoping that it will be well organized, then investors feel that it is a good time to get in so that they can take advantage of when those people who are acting in fear start coming back into the market.
Very well, Sam. Thank you very much indeed for joining us.
You're welcome. Thank you for having me.
Shohi is a business development manager at NIC Securities, joining us here. This is Business of the Trading Bell. You need to stay right here.
My name is Wanjoy Nderito. What are the indicators of a healthy stock?
Thank you for your question, Wanjoy Nderito. The indicators of a good or a healthy stock will come in 2 ways. The main indicator of a healthy stock will definitely be fundamental, which is what sort of earnings they are making, what sort of dividends, what sort of market share the company has, and this will be factors that you will get in their financial reporting on how profitable the company is and what is their history in terms of performance. The other indicator of a healthy stock will be controlled by what we call speculative factors. And these speculative factors will tend to be within the area of what is the market sentiment, what is the management, who's managing the company, who are managing, what is their reputation, and does the market feel, or what is the sentiment around the people running this company, and also what is happening generally in the economy and towards issues that can actually support what this company does. Thank you.
Well, and that's all for now. Many thanks indeed for joining us. You have been watching the Trading Bell, coming to you from the trading floor of Nairobi Securities Exchange. Our communication channels are open and ready for you. Facebook page is the Trading Bell TV show. My Twitter handle is @O'Brien Kimani, @The Trading Bell, and our SMS line is 22162. Always remember to start with the word BIZ, that is B-I-Z. Well, I'll see you again on Thursday next week, same time right here on KBC Channel 1. But for now, we take you back to Broadcasting House. Until then, have yourself a good night.